Bitcoin ETF, BlackRock, reached $22 billion on August 24, but Janet Yellen, trying to pull the plug. Here are 4 highlights. 1. Long-term holders are continuing to increase. 2. iShares Bitcoin Trust ETF has reached over $22 billion. 3. Treasury Secretary Janet Yellen has called stablecoins a threat to financial stability. 4. The next presidential administration, whichever candidate wins, will likely define the Treasury's approach to crypto regulation. Also, if you would like to support us, feel free, at any time, to smash the like button and subscribe. Now let's dive in. A good indicator of bullish price movement comes from the CoinDesk Bitcoin Trend Indicator, BTI, which shows that long-term holders are continuing to increase their Bitcoin holdings. Funds that hold futures contracts on Bitcoin were approved in the US in October 2021, and investors could also get some access to Bitcoin via funds investing in the equities of companies involved in the blockchain and crypto-related businesses. And after roughly a decade of lobbying, the SEC finally approved the first physical Bitcoin ETFs in January 2024, following a successful lawsuit by ETF issuer Grayscale. According to the website, etfdb.com, iShares Bitcoin Trust ETF reached over $22 billion in August 2024, followed by Grayscale Bitcoin Trust GBTC with over $14 billion, as you can see in the table. Since March 31st, the 30-day change in long-term supply, defined as coins held for 155 days or more, has been trending upward. This suggests a bullish sentiment and a reduction in dormant supply. The BTI indicates that Bitcoin is in an uptrend, with prices up 42% year-to-date, August 28, 24. On the opposite side, Treasury Secretary Janet Yellen is trying to pull the plug on crypto, calling stablecoins a threat to financial stability, especially if there's a run on a major provider. This concern is heightened by recent hints from Russia about using dollar-backed stablecoins to evade sanctions. Treasury is looking at cross-border issues, says Reena Agarwal, director of Georgetown University's Saros Center for Financial Markets and Policy. The blockchain industry's focus has long been on the U.S. Securities and Exchange Commission (SEC), but the Treasury Department holds a more comprehensive view of financial services regulation. Treasury is the overall policy center for financial services in the government, says Roger Nobber, director of George Washington University's Regulatory Studies Center, as quoted by Axios. Although the Treasury has conducted studies on the industry, it has only provided mixed messages coming out of Washington, which itself creates uncertainty. The Treasury has advocated for stronger oversight of cryptocurrency markets and has urged both the federal government and Congress to address regulatory gaps. However, it has not issued a definitive policy statement that would guide other government agencies on whether the industry should be nurtured or constrained. The Treasury has exerted its influence over the crypto industry mainly by focusing on financial crime prevention. Catherine Lemire, a partner at the law firm Quinn Emanuel, points out that the Financial Crimes Enforcement Network is the key player to watch, due to its role in anti-money laundering enforcement, and is the agency charged with implementing AML laws, she said. In 2013, FinCEN asserted its authority over crypto exchanges by classifying them as money services businesses, which requires them to implement monitoring systems to detect illicit activities. More recently, the Treasury has made headlines for its involvement in the taxation of crypto assets and the imposition of sanctions. The Office of Foreign Asset Control has barred Americans and U.S. companies from engaging with certain wallets linked to white supremacy groups in Europe, ransomware gangs, Russian commodities, and privacy protocols. Meanwhile, the IRS, another Treasury agency, is determining how much information to require from crypto traders when reporting transactions. Depending on its approach, the process could be simplified or made more complex. The IRS could potentially classify cryptocurrency similarly to foreign currency, allowing small transactions to be exempt from gains and losses taxes. Currently, any disposal of cryptocurrency that has appreciated in value is taxable. Even something as simple as buying a $30 t-shirt with Bitcoin requires a report. The next presidential administration, whichever candidate wins, will likely define the Treasury's approach to crypto regulation. However, delaying action is no longer an option. They are going to come up with some kind of crypto policy. The train has left the station, Agarwal stated. Do you have Bitcoin or altcoin? Do you think it will keep going up? Let me know what you think in the comments below. Thanks for watching, good luck and good profit. By Edward Cash Trader. If you would like to support us, subscribe, and share with your friends all the valuable information.